we've been seeing quite a bit of pressure coming through, of course, for new vehicle sales in Nigeria, tumbling by 55% in the first quarter of 2010. So not looking very good. Bismarck, thank you very much for your time today. Give us an indication of what prompted the fact that we've seen such a huge tumble in new vehicle sales in Nigeria for the first quarter.
It's quite interesting that we had a 55% drop in new car sales in Nigeria at a time when growth is up by 7% by the nominal official figures that have come out. It throws a lot of doubts as to the integrity of the numbers of the growth. This is a major indicator. Auto sales is a major indicator of leading economic indicator that is used to determine consumer confidence and the amount of consumer spending. So it's quite interesting that we have this kind of indicator out at this time.
Well, just looking at that figure, 7,893 units were sold in the first quarter of 2010. Where do you see that going from these levels? You're talking about growth in Nigeria being relatively robust. Clearly, it's not coming through from the vehicle sales front, but where do you see it going? Do you think we could see a bit of a recovery going forward? And of course, we've also got to take into consideration that credit extension has also come under pressure.
Yes, I think we're going to see a recovery. Obviously, this is one of the indicators that point to the fact that credit is not available. There's a credit crunch. I think the central bank is taking steps to see how they can actually incentivize the banks to come back to lending. But definitely, there is pressure on the consumer who is making a choice. One, his income is down. Two, is under pricing pressure. So it looks to me like there's a typical situation of stagflation, which has to be addressed. The fiscal policy programs, the budget has been announced and signed. There's an 82% increase in capital expenditure. There's also an increase in the recurrent expenditure. I think the banks are coming back to lending. Interest rates are down. So there's a lot of work to be done, but I think the next quarter is going to be much better than this first quarter.
And of course, we did see quite a big bailout for those banks, but the big question is, of course, whether we have been seeing the liquidity being filtered down into the actual market. We're sitting with an interest rate of around 6%, and you're talking about a stagflationary environment, which is obviously occurring in the country. How do you think that can be rectified? Also, just given the fact that we have seen a lot of stimulus coming into the market, which of course is also going to have quite a big impact on inflation down the line.
No, the problem with the situation we face in Nigeria today is that, yes, we have a stagflationary environment, but the consequences of the banking reforms is that it has become pro-cyclical and has magnified the effects of the recession and the slowdown in economic activity. Now that this is being reversed and the central bank is now confronting it, and it's reinforcing the fiscal stimulus, then we hope to see this, but it's going to take some time before this begins to filter through into the actual results. At this point in time, I think that we are going to see some growth in credit extension, and this will manifest itself in higher consumer sales. The inflationary pressure is there. There's nothing we can do about that, but I think we can live with some inflation, natural rate of inflation, whilst we get the economy to get jump-started again.
Well, industry sources are saying that in 2008, credit sales accounted for about 22% of all automobile sales. So it's not such a big number. So one does start to worry in terms of the sales that have been occurring going forward. So it's not so much about the credit extension, but it's also about how much money people have in their pockets.
Yes. Disposable consumer income, has actually declined somewhat. There's been a couple of things that have happened. One is that the voluntary savings has declined. The compulsory savings, which is the savings due to the pension schemes, have been sluggish in growth. But almost all income in Nigeria has its origin in two sources: one, oil, and two, government. Government revenue is down significantly, and just begin to pick back up after the peak of 2007. We've noticed there was at least a 30 to 40% drop in government income in the year 2008. The lag between this drop in income and the spending power of people is about a year in Nigeria, and then that's beginning to manifest itself. Now that the income is picking up, oil is back at over $75 a barrel. Production is back up to 2 million barrels. Central bank is having an accommodative stance monetary policy. I think that, and with election year spending, we are going to see an aggressive ramp up in spending, which will manifest itself in some consumer income. As a matter of fact, there's an 18,000 naira minimum wage just approved. So we're going to see that. But the inflationary impact is what has not been contained. And how are we going to have a situation where the short-term interest rates are 2 or 3%, whilst the inflation is at 11.8 to 12%. The growth in money supply is targeted at about 25%, while GDP growth is at about 7%. So the inflation gap is about 18%. That is pretty, it's going to be quite fascinating how we stay our way through this whole process.
Bismarck, we also need to appreciate, I mean, the Naira has weakened quite significantly against the dollar over the last year or so. Apart from that, we know that 55% tumble has to do with new vehicle imports. So clearly the pricing structures must also be quite a big problem, which is, of course, also dampening demand.
No, the price of cars, actually, the nominal price of cars has actually not increased. It is actually the reduction in disposable income that has happened. So people are, you have the income and substitution effect. What has happened, income has come down and people are making substitution decisions. The other thing that has happened is that because of technological change and because of improvement in data, voice and telephone penetration, a lot of people, a lot of trips and travel that has been made, that were made basically irresponsible and frivolous trips have been cut back. And the demand for vehicles have actually dropped significantly because of that. So one would say part of it is positive in the sense that technology has made the number of cars that you require to reduce. But on the other hand, there's the income effect because of a drop in disposable income. And the price and the exchange rate effect has not actually translated itself into higher prices. As a matter of fact, the nominal price of cars are about the same as they were about 2 years ago. In effect, really, the price of cars have actually come down.